US economy has been in an economic depression since 2008. We all know US GDP growth rate that we keep getting bombarded with to illustrate the strength or weakness of the US economy. Well, it's just as fake as that which vomits out of the likes of the CCP. The Fed states US real GDP is about what? Plus 12% on a year. Now consider this. What inflation measure do you think the Fed is using to calculate these GDP figures? CPI? Wrong. GDP price deflator, which tends to consistently underestimate inflation even against the fake CPI, as the graph illustrates. So what's the difference? Well, 158 divided by 153, which means that US GDP has been over-reported by 4.5% since 2000. And bear in mind that real inflation is twice CPI. So what about against real inflation? For instance, shadow stats. Well, if we use that measure, then the US has been in an economic depression for the past 2 decades. What's most probable is that the truth lies somewhere between shadow stats and official CPI, i.e. fake inflation, around probably the halfway mark of US inflation currently being about 10%. That would still suggest that overall the US economy has stagnated since the dot-com bust, with a growth rate that is about half that which has been posted, and even worse performance since the financial crisis, which the probable real inflation growth rate has been 0. So since the financial crisis, the US economy has not grown at all, which is the cost of bailing out the banking crime syndicate. You think there's no cost? Well, that's the cost, 0 real growth. Instead, all they do is produce fake statistics like CPI and GDP. So no wonder the Fed has been printing money on an epic, ever escalating scale, trying to keep the dying economy ticking over, keeps kicking that day of reckoning can down the road for the next Fed president to deal with. In terms of asset prices such as stocks and housing, the Fed cannot allow for any sustained drop in asset prices, for it will literally bring the whole house of cards crashing down on it. To reveal the true extent of the economic stagnation that the Fed has so far successfully masked by means of inflation stealth, theft or tax. It's a case of printing money to infinity and beyond. Hence, remain invested in assets that are leveraged to inflation, and why this stocks bull market will just keep chugging along until the point when the Fed loses control of the QE monster that is created. This is why I've been banging the inflation megatrend drum for over a decade. QE forever, quantitative inflation. Because there is no free lunch, you cannot bail out the banking crime syndicate without paying a price. And that is the loss of purchasing power by means of real inflation, as illustrated by my January 2010 Inflation Megatrend ebook, which you can download for free. And a 12-year-long mantra of buy the deviation from the high, i.e. the greater the deviation from a good stock's high, and the greater the buying opportunity presented. I have been monitoring this inflation train wreck for over a decade, and we are definitely heading for high inflation. How high is hard to say because it depends on the magnitude of the policy mistakes the Fed and the US government and all of the other governments such as the UK will continue to make going forward, as they desperately keep trying to kick the can down the road. And you know what's funny? There are still the deflation fools, Cathy Deflation Wood and et al. Out there that populate the mainstream press regurgitating their deflation thesis, despite it having been wrong for decades, as we have always been on the path towards real high inflation. You only get deflation right at the very end, when everything collapses into a debt deflationary black hole. Right at the end. which is why, whilst most asset classes are likely to experience some pain over coming years, as the Fed basically has fired most of its bullets or will be forced to adopt painful measures to correct the excesses, if they can that is, then yes, asset prices can fall temporarily. To what degree and for how long is uncertain, but what is certain, holding fiat currency is going to be an even bigger loser than it has been for the past 10 years. It's a case of trying to limit the damage done so that one can hold on to as much of one's wealth as possible. That's in real terms. We are in a difficult place right now, for I know stocks are overvalued, but I also well understand the path we are on requires us to be invested in assets that are leveraged to inflation. Else one is 100% guaranteed to lose one's wealth, destroyed, as ever more desperate governments enact even more crazy MMT policies in attempts to keep the economies ticking over, waiting for the AI gods to emerge and save them. So batten down those hatches, folks. Watch those multiples, for that is where you will likely suffer the greatest investing pain, i.e. 50 times earnings for a $2 trillion corporation that's asking for financial pain. And that's not even considering Nvidia, that balmy Looney Tune, 106 times earnings. Remember folks, inflation kills future earnings, because obviously the value of the dollar will be less in the future than it is today. Being invested in good stocks at or below a P of 20 is required to surf the inflation megatrend that we all ride. Above that, and you're likely to experience investing pain. At least ISAs and to a lesser extent SIPs in the UK are tax-free, but you never know, governments in desperate times can do desperate things, such as taxing the fake gains in asset prices courtesy of fake inflation. Meanwhile, the UK just announced the largest jump in CPI inflation since records began 1998. All in the face of the mantra of temporary inflation that the clueless commentators state will soon fall back. Inflation rises are never temporary. They are cumulative and exponential, hence the inflation megatrend. This video is an excerpt from my recent comprehensive analysis of the stock market. A full spectrum analysis that concludes in a detailed trend forecast into the end of 2021 and then continues all the way into 2022 with indications for what to expect even for the remainder of 2022. Analysis that had me dig deep to clear the mists of time, all the way to deep analysis of the seasonal trends on a scale that you will not see anywhere else. From the usual seasonal analysis that's expanded on multiple time frames to the new short-term seasonal trend and the presidential cycle, best time of year to invest in stocks, and a 2022 seasonal investing pattern, and then putting it all together into a final stock market trend forecast, and then coverage of AI stocks and my buying plan, as well as the high risk stocks portfolio. And then we take a look at Afghanistan, China, the comprehensive analysis that took me a good 2 weeks to do this analysis, and it's first made available to patrons who support my work. And do check out my full analysis that's been first made available to patrons who support my work. Extensive analysis on updated AI stocks, buying levels and more, so that you are well prepared for what's to come, as I hope my patrons are, as I am, because I put my money where my mouth is. What I say, what my analysis suggests, I implement. It said buy Intel below $50, and that's what I did. Triple my holding of Intel. Anyway, my latest analysis includes AI stocks, updated buying levels, as you can see from this list of contents, And do consider becoming a patron. I supporting my work for just $4 per month. I'm underselling myself. After all, there's inflation. I should inflate the inflation. It should be $50 a month, not $4. And do remember to subscribe to this YouTube channel for new videos as we chart the inflation mega trend in motion, a runaway train. And you got the fools at the Fed saying what? Oh, it's transitory. Oh, there's no real inflation. Oh, it's all, no, you've lost control. You lost control when you started printing money and you have lost. You understand this? The Fed does not control inflation. They have lost. It's like the 70s again. They're just gonna keep saying, "Oh, it's oh, it'll come down. It's come down. Oh." They'll do that for a decade. That's what they did during the 70s. They didn't know it was gonna fall the way it did. They just kept saying, "Oh, it's gonna fall next. Next 6 months it's gonna take. Oh, it's gonna come down. Oh, it's gonna." 10 years later, they go, "What the hell? We've just spent what's that? A decade." Right, let's ramp up interest rates and kill this inflation monster once and for all, and that's what they did. Yeah, who was it? Greenspan. Was Greenspan this? No, it wasn't. It was Volcker, wasn't it? Yeah, that was it. I'm sure it was Paul Volcker. See, I'm getting old. So that's what they did. We've been talking crap for it. That's what they're doing now. They're talking garbage. 6.2%. Real inflation's double that. Crazy inflation is here, as I've been warning. You can't say you weren't warned. Go back and watch my videos from 18 months ago when they first started printing the money. I was saying, like, buy your. Anyway, you're gonna watch it later because I've got that outro. I've got that bit in every one of my videos towards the end, so you can watch it after this. My strategy during the great crypto bear market of 2021 was to accumulate into a select few cryptos that my research had deemed to be, well, relatively safer. Obviously with cryptos there's no such thing as safe. Anyway, deep discounts to the highs of as much as 80% improves the risk reward ratio somewhat. And the rest of this truly extensive analysis has first been made available to patrons who support my work at just $4 per month. Extensive analysis that includes cryptos that I have deemed to have a high probability of trading to many multiples of their current price, most of which still trade at deep discounts, including my price targets or where they could reach during the next crypto mania when the millennials will be FOMOing out of their mouths, foaming. So do consider becoming a patron by supporting my work for just $4 per month, $4, for immediate access to all of my analysis and trend forecasts, including learning material and including my recent analysis on why so-called transitory inflation is likely to be permanent. So batten down those hatches for what is to come. And then there is my extensive analysis of silver, including a trend forecast into mid-2022. Also is extensive analysis on the prospects for the stock market into mid-2022, with my next analysis, soon to be published analysis, updating the buying levels for AI tech stocks, Google's, Amazon's, Facebook's and so on, AMD, TSMC. I better stop there. For instance, Intel hit its buying level of $48 last week, which is what my patrons have been patiently waiting for since Intel was trading high at $65, when I was saying, no, don't buy at 65, just buy at the buying levels. That's why I've set the buying levels where they are high probability levels that they should trade down to eventually. And here we are, some X months later, $48, buy. And I did what I said I was going to do. I tripled my holding of this quantum AI tech stock, now trading at a dirt cheap P multiple of just 9. I compare that to Amazon on 58, with many more stocks homing in on their buying levels, such as IBM, which I bought splitting into two, well, 5 shares of IBM and you get 1 share of Kendall. If you value them together, then the current stock price is around $132, whereas it's trading at $126. So you should have bought before the split, because you'll have a net value of $132 to $133 against the market price of around $126. So that's IBM. And don't forget Facebook, where sell buying at $384. Wait for it, $301. That's what it's homing in on. It's not got there yet. It came close, $308 last week. I nearly bought it at $312, but I didn't. But it was close. So do consider becoming a patron by supporting my work for just $4 per month for immediate first access to all of my analysis and trend forecasts. Your mega trends ahead of the curve investing analyst with over 35 years experience. That includes being one of the few who both recognized that the stock market was about to crash in October 1987 and profited from it by shorting the Dow before it crashed. $4 per month is dirt cheap for what you're going to be getting access to, compared to the clowns on YouTube barely out of puberty pumping scams and such like, totally oblivious to the megatrends such as the inflation megatrend and the AI megatrend that I've been banging the drums for since 2015, when you could have picked up the likes of Microsoft for about 1/10 its current price. Then we have the war with China megatrend, which I've been drumming since what? Must be late 2016, yeah, something like that. All of these megatrends are where the trends manifest themselves, and all you're usually aware of is like the fluff on top, barely visible fluff on top. That's what most of the commentary is concerned with. You don't even. When did you last hear about the war with China megatrend? I bet you haven't. Well, you heard of AI, but you know it's a megatrend that's going to run for 20 years. And quantum computing megatrend is part of the AI megatrend. Anyway, do consider becoming a patron by supporting my work for just $4 per month. You're not going to get any better value for money than that, as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for, well, over 6 months. It's more like a year now. And that's what I was saying last year. If you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. I bought a Corcher K7 for £340. Current price on Amazon is, $565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.